Hi there, this is Vinney again. Hey, I want to talk to you today about passively investing in real estate. And not only real estate, I want to talk about how should an investors, if you're talking to them, you want to teach them and share with them, different people should really diversify their portfolio, because if they don't diversify, then it will not help. You don't want them to really, put all the eggs in the one basket. You've heard that, right? So we don't want to do that. I like people to actually invest, in index funds, in, stocks if they are mutual funds, but they should definitely invest in real estate and also into some other ventures, if they like to, invest. It depends on what's their, what's the word, risk factor. I think that's the key thing. Risk factor is so important, but the key thing is you want to tell the investors, or if you're investing yourself, what you should look for are what are these investments about. I mean, you need to not just blindly put the money, because sometime I've heard, that people say, oh, I lost my money. Oh, I didn't really think about that. All those things. So please be sure you got to do your due diligence on the sponsor, on the operators, how many are there in that LLC or who are offering this property, what's their background, what's their structure, how long they have known each other, and how they're going to be performing. And the thing is, see, you could put together a great offering or investment by assuming, making a lot of assumptions and different ratios and things like that. That's not the right way to do it. No, you want to make sure that you don't put money where you don't understand what the product is. Is it multifamily? Is it hotels? Is it mobile homes or storage units or shopping centers or things like that? Because you want to see what's your criteria, how you want to, and what's the return is. How much are they going to pay you monthly or quarterly? Cash flow has to be the king right there. And then what's their assumption to sell? When are they going to sell? And they will exit, we call it exit. They will dispose of the property and give you the equity gain. That's the word, equity gain, to give you the complete IRR is the other term to differentiate between the assets, whether this is a better asset to invest or this one is better asset to invest. So the biggest thing is that you don't want blindly to invest with anybody. You want to make sure you see their track record, see their personality, because the people who are really putting it together to purchase it, who's going to manage it? That's what I've come to realize in last 14 years. It's so important. I mean, we could buy $35 million property or $50 million property, but the big thing is, how are we going to manage it? Day in, day out, how are the cash flows going to be making, that kind of cash flow that they're promising to the investors and all, and what kind of communication they're going to have with you? Would they just leave you alone and not talk to you? Or would they be able to quarterly meet you or give you the updates on the investment and everything, and they will answer your questions? So communication also is very big part. You want to feel comfortable and look at their genuineness, their openness, their transparency, their records that they are sharing with everybody, and they are available to answer all the questions, and they are not rushing through. And be very, very skeptical when people say, oh, we don't have but just one day left, or we have a lot of people already signed up. Let them show you the proof, because sometimes they like to just say, oh yeah, we are selling out very quickly, this and that and all. That's not the right criteria. Don't be rushed into making a decision, unless you really are fully comfortable. And remember, on that legal paperwork, it will say you could lose all your money. They have to say that. The attorneys put that down and everything. But you got to make sure that you are investing only the portion that you can lose. See, that's the other part. A lot of people say, Vinney, I want to spend, 100,000. I'll take a HELOC or something, the loan from the home, and invest it in there. You have to be very, very careful. Is the investment suitable for the investors? That's what we call it also in the SEC terms. You want to make sure that you are suitable to invest in that property, and what's their legal structure, CPA, what kind of forms they'll be giving to you, all those kind of things. So thanks for watching. I hope you are going back to the modules and really learning a lot from my friends, my team members who are teaching you all these different techniques to crush it in this business. And I know you'll be successful. Just hunker down, write down your goals, and then take action, take massive action. Because there are two kinds of people in this world, as you know, the watchers and the doers. So I want you to be the doer. I want you to take that, all the knowledge you're gaining from this course and then implement it. If you want to even go to a higher level, we have bigger courses and personal coaching and group coaching and all the things like that, if you are interested in that. Thank you again. This is Vinney Chopra. I'll see you in another video.